I'm excited to talk about a topic that I believe can truly change your financial future: real estate investing, especially for young adults. You don't need to be rich, older, or have a fancy degree to get started. All you need is the right knowledge, the right mindset, and the willingness to start small and grow. Real estate is one of the most time-tested ways to build wealth. You've probably heard the saying, don't wait to buy real estate. Buy real estate and wait. And while it sounds like a cliche, it's actually packed with truth. Property tends to appreciate in value over time, meaning the earlier you start, the more time your investments have to grow. But if you're just stepping into adulthood, or maybe you're in college, or just started working, investing in real estate might feel completely out of reach. I get it. It sounds intimidating. Mortgages, down payments, property taxes. But trust me, once you understand the basics, it becomes a lot less scary and a lot more exciting. Let's start by clearing up a big myth. You do not need to be rich to invest in real estate. What you do need is a plan, and that plan starts with getting your personal finances in order. That means budgeting, building an emergency fund, paying off high-interest debt, and improving your credit score. Why is your credit score so important? Because lenders will look at it when you apply for a mortgage. A better score means better loan terms, lower interest rates, and potentially thousands of dollars saved over time. Once you're financially stable, the next step is to educate yourself. Learn the language of real estate. Understand what terms like cash flow, equity, cap rate, and appreciation mean. These aren't just fancy words, they represent the fundamentals of what makes an investment profitable. Read books, listen to podcasts, watch YouTube videos from reputable real estate investors. Join local meetups or online forums. The more you learn, the more confident you'll become. Now let's talk strategy. Now, there are many ways to invest in real estate, and not all of them involve buying a big house or apartment building. One of the most common entry points is called house hacking. This means buying a small multi-family property like a duplex or triplex, living in one unit, then renting out the others. The rent from the tenants helps cover your mortgage and sometimes even leaves you with extra cash each month. As a young adult, this is a fantastic way to start. You live for cheap or even free, and you build equity at the same time. Another strategy is buying a single-family home and renting out the spare rooms. If you're comfortable with roommates, this can be a very manageable first step. It's also a great way to dip your toes into being a landlord without taking on too much risk. And once you move out, you can keep that house as a rental property and move on to the next investment. Now, let's say you don't want to be a landlord, or you don't want to deal with tenants and maintenance. That's totally fair. There are still options for you. Real estate investment trusts, also known as REITs, are a great way to invest in real estate without owning physical property. You can buy shares in a REIT just like you would with a stock, and it allows you to benefit from real estate profits, like rental income or property appreciation, without getting involved in the day-to-day operations. It's low maintenance, and you can get started with as little as a few $100s. Of course, with every investment, there are risks. Property values can drop, tenants can stop paying rent, unexpected repairs can pop up. That's why due diligence is so important. You need to analyze the property, understand the neighborhood, and be prepared for the ups and downs. Real estate is not a get-rich-quick scheme. It's a long-term game that requires patience, persistence, and a willingness to learn from mistakes. Financing is another big part of the equation. As a young adult, you might not have a huge pile of cash for a down payment, but there are programs out there to help. FHA loans, for example, require as little as 3.5% down. There are also first-time home buyer programs in many cities that offer grants or down payment assistance. Partnering with someone, maybe a friend or a family member, can also make it easier to get started, though it's important to have clear agreements in place to avoid misunderstandings. Now let's talk mindset. Real estate investing isn't just about numbers and properties, it's about your attitude. Too often young people tell themselves, I'll invest when I'm older, or I can't afford it right now. But the truth is, there will never be a perfect time. Starting early, even in a small way, gives you a mass advantage. Compound growth and long-term appreciation are your best friends. The earlier you begin, the more time your investments have to grow. It's also important to see failure as part of the journey. You might make a bad deal, or a renovation might cost more than expected. That doesn't mean you're not cut out for real estate. It just means you're learning. Every experienced investor has a story of a deal that didn't go as planned. What separates successful investors is that they keep going. They adapt, they learn, and they grow. So what can you do today to take your first step? Start by setting a goal. Maybe it's to buy your first rental in the next 2 years. Maybe it's to save up for a down payment. Then break that goal into small, manageable steps. Track your progress. Celebrate your wins, no matter how small. Surround yourself with people who inspire you, people who are also on a financial journey. The more you immerse yourself in this world, the more it becomes part of who you are. In closing, real estate investing is one of the most powerful tools you can use to achieve financial independence. It's not reserved for the wealthy, the older, or the experienced. As a young adult, you have a huge advantage: time to learn, time to grow, and time to let your investments work for you. Don't wait until you feel 100% ready. Take that first step, even if it's small, because the sooner you start, the closer you are to building the future you want. Before diving into real estate investing, it's essential to begin with solid financial preparation and education. Many young adults get excited about the idea of owning property, but overlook the importance of having their personal finances in order. A strong financial foundation is what makes real estate investing sustainable and less stressful in the long run. Start by tracking your income and expenses, creating a realistic budget, and committing to saving a portion of what you earn. Build an emergency fund that can cover 3 to 6 months of living expenses. This safety net protects you from unexpected costs that might come with property ownership, like repairs or vacancies. Another crucial step is improving your credit score. Your credit score affects the mortgage rates and loan terms you can qualify for. Paying your bills on time, keeping credit card balances low, and avoiding unnecessary debt will help you qualify for better financing options when it's time to buy your first property. The lower your interest rate, the more affordable your monthly payments will be, and the more profitable your investment becomes. Along with financial preparation, educating yourself is just as important. Real estate has its own language. Terms like cash flow, equity, appreciation, and cap rate are commonly used and essential to understand. Take the time to read books, listen to podcasts, watch online tutorials, and learn from experienced investors. Join local real estate meetups or online communities to ask questions and hear real stories. The more you learn, the more confident you'll feel making decisions. Jumping into real estate without preparation can lead to mistakes that cost time and money. But with solid finances and a strong knowledge base, you'll be in a position to spot good deals, avoid common pitfalls, and build long-term wealth. Starting smart is the key to growing successfully. When it comes to real estate investing, starting small and using beginner-friendly strategies is a smart and practical approach, especially for young adults who may not have a large amount of capital or experience. Jumping straight into buying a large apartment complex or multiple properties can be overwhelming and risky. Instead, it's better to begin with manageable, smaller investments that allow you to learn the ropes without exposing yourself to too much financial strain. One popular strategy is called house hacking. This involves purchasing a small multifamily property, like a duplex or triplex, where you live in one unit and rent out the others. The rental income you receive helps cover your mortgage payments, property taxes, and maintenance costs. This way, you significantly reduce your living expenses while building equity in the property. It's a fantastic way for young adults to enter the market because it combines the benefits of home ownership with the income potential of rent. Plus, you gain valuable experience being a landlord on a smaller scale, which prepares you for bigger investments down the road. Another beginner-friendly option is to buy a single-family home and rent out spare bedrooms. This approach works well if you're comfortable sharing your space with roommates. Not only does it help you cover housing costs, but it also teaches you important landlord skills like tenant management, maintenance, and budgeting. When you eventually move out, you can keep the home as a rental property and generate passive income. For those who want to avoid the responsibilities of being a landlord, investing in real estate investment trusts or REITs is a great alternative. REITs allow you to invest in real estate portfolios without owning physical property. You can buy shares through a brokerage account just like stocks, making it accessible and low maintenance. This diversification helps spread risk and still lets you benefit from real estate's long-term growth. Starting small and choosing beginner-friendly strategies give you a strong foundation to build confidence, learn the market, and grow your real estate portfolio steadily over time. Adopting a long-term mindset and taking action early are two of the most important principles for success in real estate investing, especially for young adults. Real estate is not a get-rich-quick scheme. It's a gradual process that rewards patience, persistence, and smart decision-making over time. When you think about investing in real estate, it's helpful to view it as planting a tree. You won't see the full benefits right away, but with care and time, it will grow and provide shade, fruit, or even profit for many years. Starting early gives you a significant advantage because of the power of time and compounding. The longer your money is invested in real estate, the more you can benefit from property appreciation, rental income, and equity buildup. Even if your first property doesn't generate huge profits right away, holding onto it and managing it well can lead to substantial financial growth down the road. By beginning your investing journey in your 20s or early 30s, you give yourself decades to learn, adapt, and build wealth. Taking action early also means overcoming the common excuse of waiting for the right time or waiting until I'm more financially stable. While it's important to be financially prepared, there will never be a perfect moment to start. The housing market will always have ups and downs, and your personal finances will always have challenges. The key is to start with what you have, learn as you go, and improve over time. Even small steps like saving for a down payment or researching properties move you closer to your goal. Having a long-term mindset helps you stay focused during setbacks or slower periods. Real estate investing involves risks and unexpected expenses, but seeing the bigger picture keeps you motivated. Instead of getting discouraged by short-term difficulties, you learn to think strategically about your investments, knowing that wealth building is a marathon, not a sprint. This patience and consistency will pay off and set you up for financial independence and security in the future.